Hey, it's Tim from EminiMind. Wanted to do a trade recap. First trade from today was the 15-minute breakout, and this one ran pretty nice. I'll go through the other 15 minutes from the week as well. But this dotted line is the high of the first 15-minute bar. Today's Thursday, and we broke out, and then you can see how we traded sideways, just putting the stop below that 15-minute bar. Is the best way I've found to stay in those and catch those breakouts when we might go sideways for the first hour or something like that. Um, this one ended up running quite a bit, and I've always taken a profit at plus 20, and the best way I've found for managing multiple contracts. So I don't use like a first target or a smaller target on those. It's just plus 20 or the stop out. But there's a couple things that I've been doing this year that I wanted to touch on. At plus 15, I've moved my stop to minus 4, and that just helps. If you've got, like today, we had almost a 20-point first 15-minute candle, and then you add 15 points on top of that, you'd essentially be giving back 35 points if the market was up 15 points already. And so if it didn't quite make it to that plus 20, at least you've got your stop to minus 4. I've played around with it over the years, as most of you know, with moving the stop to break even, plus 4, plus 10, various things, and keeping it as simple as possible with the initial stop on the opposite side of the first 15-minute candle, and then using that plus 15 minus 4 has been helpful to save a few points when in those small instances where it goes like plus 16 or 17 points and then rolls over. You're going to be protected. And the other thing I want to touch on, I guess two things on the 15-minute. If you've got multiple contracts, once you get your plus 20 hit, you can trail the 15-minute bars from there to try to get another 10, 15 points maybe. So like today, you get your plus 20, and then if you were to trail, let's say you got 4 contracts, even if you took 3 of the 4 off at plus 20. You could split it down the middle. That's fine too. But at the very least, taking a chunk off at plus 20, and then if you're trailing below the 15-minute candles, then it gets you out at 64. And with the entry at 15, you get a nice chunk more, because the idea is to catch these bigger runners when you may not have as many opportunities for retracements. Today we went sideways for a while, so not quite as critical, but even so, you start to break out around like the top of the 30-minute range, and then next thing you know, you get one of these big bars, 30-point bars, and it can get hard to take retracements up here when it might feel like you're so far above where you started. So there can be some hesitation. So that 15 minutes a nice way to get in and just kind of set it and forget it. And then the last thing with the 15 minute is um, taking the opposite trade. So so if you get stopped out, so meaning let's go back here. So this was the 14th, and if you take the this is a perfect example where we traded almost to 20 points and then we rolled over. And so using that, moving your stop up to minus 4 helps at least eliminate a full stop out of, like in this first candle was almost 17 points. So if you do get stopped out on a trade, it does come back and go the other direction later in the day. Taking that, in this case, the first one was a long and the second one was a short, and using the same 20-point target, this one went from 36 down to 550, so just beyond the 20-point. And so that's what I mean by taking the opposite one, and then you can catch the 20 points in the other direction. So those have been working really well this year, and even last year, and 2021 and 2020, when I went back through my trades and some of those notes that I had. Doing the opposite was definitely profitable. Um, just depends on if you want to take them or not. So the other one from today, if we go to the 1 minute chart, there was actually a really nice touch of the gap fill from yesterday. And you can see that right here. So this dotted line, that was the 15-minute high. This gray line is the 30-minute high. We came up right to the close of yesterday. We formed this inverted hammer, kind of an inverted hammer. It's like a doji, but nonetheless, you were met with resistance. You had this topping tail. That's the important part, where the wick is, pointing up. So you're looking to short below it. And this one ripped pretty good. 39.1675 was the entry, and then just by trailing each 1 minute candles high all the way down, it takes you all the way down to this 39.06. You notice these two bars, I don't bother tightening my stop because they're inside this bigger bar, and so just leave your stop up above the big bar, allow the inside bars to pass, and then this next bar trades lower. So that was a nice short. 15 minutes. Going to, so those are really the only ones from today. There were a couple little retracements in there, but nothing that I felt was worthwhile. The nicey ticks weren't super helpful today as far as finding like low ticks at lows. We kind of traded down beyond the 61.8 of the halfway back long, and then ripped up and turned around. So a little bit of a kind of a tougher morning for spotting retracements. I didn't see a whole lot. But let's go to yesterday because I want to talk about the two failed back-to-back 50s. So yesterday, top of the 30 minutes is here. Bottom of the 30 minutes is here. I always like to mark those because it gives us a good gauge of, are we likely to be trending or range bound? Well, yesterday we were by and large range bound, and we were stuck in between the high and low of the first 30-minute range. And so we broke a 50% short, and we broke the 50% long really early on in the day, and we just stayed in the middle of the 30-minute range. So there really wasn't anything to do. A couple dips outside or below, and then see that the wicks took us right back up to the bottom of the 30-minute range. So didn't end up with any trades yesterday. Really, this last week has been pretty slow. It's options expiration week or futures expiry this week, and that tends to be a week where I trade lighter. And then next week we actually have the Fed meeting announcement on Wednesday, so I would expect this market condition to kind of carry over into Wednesday, and then depending on what happens, fireworks may go off on Wednesday, they may not, but following the meeting, the next 6 weeks should be really good trading opportunities. So yesterday the 15-minute breakout was a reverse or a stop. It came down. This was the 15-minute low. Traded down for a little bit. I think it went like, I don't know, maybe 5 points or so, 88 down to 70. Next, let's see, 15th. Yeah, a little more than that. 88.50 was the low, the first 15-minute bar, and it went down to like a 70. So actually did go a decent ways, and then kind of petered out. So mostly going sideways. But that the same thing on Tuesday rather. That was the one we just talked about, where it went up, got close to 20 points, and then ended up trading to 20 points to the other direction. So a couple of 15 minutes this week, couple of 1 minute breakouts like I just showed as well. Not a whole lot of retracements in the Tuesday live session. We really didn't have much to write home about of retracements. Monday we filled the gap on the 15 minutes, so there wasn't anything to do there. And then the other position that I had was the Bitcoin trade, the swing, and that was from the hammer on Friday, buying above the high. Now this was on the actual Bitcoin, not in the futures. So that's why there's this gap from the weekend. But basically getting long above the high of the hammer on at the halfway back, and then the it's not really reflected here, but we did trade below kind of this inverted hammer. So basically going 20,000 up to 24,000 was a little swing that I took. Going to um, the swing trading of the SPY, you can see this smaller retracement we've traded through. Pretty bullish day today. It'd be nice if we could go up a little bit higher and tag up at like this 398 tomorrow. And put on some puts ahead of the Fed meeting announcement for next week. So that was basically my week in a nutshell. Not a whole lot going on, but some good trades nonetheless. You don't have to go crazy when these weeks are a little bit when you have these like gaps at the open every day when the market's jumping around a lot. Sometimes it's nice to just kind of sit back and take a couple of trades and call it a day. So hope you had a great week, and we'll talk to you soon.